This is Create the Next from ProCFO Partners, where every week we explore strategies and ideas for financial management and growth to help today's businesses put their financial picture in context.
Welcome back to Create the Next. I'm Chris Mitliff, and I've got Todd Sloan back with me today. Todd, it's been a minute since we were together, maybe early part of the year, and some things have changed sort of economically in the U.S. Globally, we're in a different stage than we were from more pandemic-minded things. And last time we talked, it was about kind of growth and scale and some strategies, some tactics, some ideas around that. We talked a lot about kind of that early stage or startup. I wondered today if we could talk a little bit more about kind of that mid-stage company, maybe late stage. But I'm wondering, to start, what's the climate from your perspective? What are you seeing that is a new or unique challenge for those seeking some venture capital, seeking an additional round of funding? Kind of what's happening that's maybe unique right now, that if I'm a mid-market company and I'm in my first or second round, or I'm just kind of out there seeking venture capital, is there something that's going to be a rock in my shoe right now as I'm trying to kind of sort through some of that?
Yeah, valuation, right? So obviously valuation pressure. If you go to raise a financing round today, are they going to push back, and are they, being the investor community, going to push back and say, last round was valued here, maybe we're not so excited about those kind of multiples, and push back on valuations. And ultimately that creates dilution pressure, yet at the same time, these companies need, capital to continue to grow. And so that's probably right there. That's the formula that, challenges, that mid-stage, early stage companies, and kind of continuing to pursue their goals.
Do you feel like there's and we've talked a little bit about this before on the show with others, what's the relationship been like as so many organizations, so many companies were focused on growth, and showing growth, but profitability is becoming more and more a bullet point in that discussion, where a lot of venture capitalists are saying, that's cool, good for you. Show me how it's going profitably. And if I don't have a response to that, I'm flat-footed. Are you seeing that that's also part of the dynamic that's new or changing?
I think that's always part of the dynamic, is proving that your business model works. So I'm always been a big believer, coming from my seat at the table, if you will, as the chief financial officer, is that we've got to be able to show a path to profitability. You've got to be able to show that the metrics, the unit economics, if you will, work. So even if you're burning cash, which we all do as early stage companies, the ability to prove that you can show that business model can be successful as you start to scale and you start to get closer to maturity. And if you can't prove that out, and it's just obviously a business model that doesn't have the great unit economics, that's going to be a challenge, and investors will snuff that out at some point and hurt your ultimate goals and valuation path.
I think investors used to be more patient with that, or at least more willing to sort of say, okay, well, I'll be along for the ride. And now, at least in technology, it's a little less. It's a little more. I'm not ready to dedicate some attention to you until you can do these things. Is that accurate? Are you seeing that?
I do see venture capitalists being pretty supportive, so the early stage, so maybe a Series A person saying, yeah, we get that this is a challenging market, but we made a bet with you because we do believe in your business model. Not so much, we do believe in the market that you are going after, maybe as an example, like a healthcare tech company that, is providing a great benefit offering that they do believe the market needs and the demand is out there. And even though this may be a challenging market, we're going to continue to support you. Does that mean they're going to hand you big checks for huge valuations? Not necessarily, but they will continue to support you and, invest just at maybe, a little tighter valuations. So I do see support from good VCs that certainly believe in the business that they invested from the beginning.
I feel like that's a great segue to a mindset that maybe startups and as you pointed out, Series A are enjoying. But let's talk a little bit more about how do we define kind of that? How do I know when I'm getting into this sort of mid-sized, sort of strategically, I need to think differently? And I kind of want to position this in two different ways. How should I be preparing for scale as that sort of investing-minded organization who's looking for, as you said, Series C or later? I'm kind of moving into that. What should I be keeping in mind? And then what do I do with all of that? What do I do with some of that investment? How do I start to think about headcount? How do I start to think about expansion? What should I be thinking? Capital? How should I prioritize? So let's walk through some of that stuff. From your perspective, how do I start to think of myself? What are the hallmarks of a mid-market or a mid-sized company that is starting to need to take this investment round seriously in a different kind of way?
Yeah, it's let's say you've gotten to say 20 million or so. You're seeing market acceptance for your product. How do you now transition to sort of really adding fuel to the fire? Maybe you've been very much sort of a founder-led sales organization. So how do you now start to think about the go-to-market investment? And the go-to-market investment or the marketing funnel. So how are we going to, really sort of add that fuel? Are we going to invest heavily in, marketing efforts, brand awareness, advertising, lead generation, events, content creation, all of these sort of, marketing tools to kind of really start to build more awareness, and broaden the market opportunity, and then feed that with, sort of the sales capacity planning and a lot of the decisions around how do you structure the sales organization? Do you go geographical? Do you go vertical? What kind of capacity planning are you thinking about? What segments are you attacking? Are you attacking sort of the SMB world, or is your product really more geared towards enterprise offerings? And that all impacts how you design your sales organization, and you transition from that sort of founder-led sales organization to more of a, meat and potatoes, larger sales organization with all the different components and fact breakdowns. So that's really a lot about, how your product has gained acceptance in the market to get to 20 million. Let's say, again, sort of talking about that mid stage to kind of, it's very hard to go from 20 to 40 or 50, on how you make that transition. A lot of companies will, you fail a couple of times with some sales organization structure, and, hopefully you're not failing big, because that could always set you back a little bit, a year or so. But those decisions are critical in terms of making that transition from that 20 to 50 million, if you will.
Is it obvious to me? I mean, I kind of want to ask a question that seems elementary, but you mentioned 20 million. Are there benchmarks that I should just kind of be looking for and say, okay, my company has hit this size, or as a founder, have I reached some capacity? Or how do I know? Should I be surrounding myself with, the right advisors to help guide me through this? How do I know is it a time thing? So you mentioned kind of product market fit. We've been here 3 years and it's going well, or we've shown growth, market acceptance of X%. What are some of the signals I should be watching for?
There's always a ton of great benchmarks out there. How companies if you talked about, say, software companies, for example, there's lots of benchmarks out there for best in class, and how they were very efficient in driving forward, and the decisions that they made, whether they are looking at, say, again, that enterprise effort. How did, the best in class of these companies sort of been able to move that needle forward? So there's lots of metrics out there that you can see, things like, what was the cost to acquire customers? how are your retention numbers, focused? So did you have great retention with your clients and expansion of those clients? And, what kind of resources did you put against them? Did you put sort of good customer success, or client management type resources to, continue to focus on retention? So there's lots of those kinds of metrics out there, that show best in class and worst in class and those in the middle, and how they, went from a 20 to a 40, and some of the investment initiatives that they use to kind of drive that forward.
So once I'm there, let's say I get my round of funding, or let's say that I want to be really specific about here's what I need to do with that funding. Do you have some guidance on how do I not just act the part of a company that wants to kind of be in that mid-size, but how do I be that? How do I position myself? What kind of structure, what kind of infrastructure do I need to start to do that so I can move to that 20 to 50, 20 to 60, and then 60 to 100, whatever my mindset is?
I found, in the marketing funnel, I think it's important to really test and understand where you're having better success. You may be using one channel that's producing certain results. So really doing a good job of sort of measuring the trends that are occurring within these different marketing funnel opportunities to generate better lead opportunities, better opportunities for sales to kind of the sales team to close, and then looking at close processes. What does the sales cycle look like? So it gets very granular in really trying to measure that. So I think it's important for organizations to have a decent infrastructure to allow yourself to measure the performance of some of your marketing and/or sales initiatives. And that comes through sales ops or operations teams. So sometimes, I think that, and this is biased, but the G&A function gets, short shifted in terms of resource. Yet there's a demand for data and information to help us drive decision making, right? And let's say that is a bit of a cliche, but it is true, data-driven decision making. And if you don't have the data and you're not really evaluating it properly, you're not necessarily helping yourself as you put resources towards certain initiatives. You need to be able to measure those initiatives. And I do think, having a good sort of operations team that helps to, identify trends, and successful trends, unsuccessful trends, as because your resources aren't flush, you're not sitting on a huge amount of, capital, you have to use it wisely. So I do think, helping to measure all of those marketing and sales initiatives are really important as you're trying to make decisions to drive, forward, growing from 20 to 40 or 50.
I think that's really interesting and good advice for two reasons. One, as a marketing pro, what you do as a startup is very different than what you do when you reach that sort of mid-size, and engineering almost becomes part of what you need to do. That's when you get into the really, as you said, granular A/B testing. What if we move the button from this page to that page, or from this side to that side? If we see a 2.1% increase in this, it lifts that. It becomes very different from maybe more of the creative minded aspect that the startup might be enjoying. It's becoming very much, we need to have more and more quality data to respond to. The second thing that I love about what you're sharing, it's kind of a segue too, is you're talking a lot about systems and processes. And in that startup world, as you said about the founder, there's a lot of hustle, there's a lot of hard work, but you can't get to that next place unless you have predictable systems and processes. What do you think is the role? And you've kind of dropped a pile of knowledge on us just this morning, but how should I be looking at this from, let's say I'm a founder, what sort of advisors do I need around me? If maybe I've got a board, maybe I've got a small team, but do I have a CFO? Do I need a CFO? And should they be providing me with the same level of insight that you are? Or should I be seeking that from, I don't know, somebody else who's, my my pickleball buddy, who's also a startup, and now he's trying to merge in. Talk to me a little bit about how I should be sourcing my decision making.
I like the pickleball reference. Huge phenomenon across the world. Anyway, I do think, when you're in that 20 million range, to have a CFO that's had a lot of sort of operation experience is critical. You're wearing in these stages of companies, you wear a lot of hats. So I've sat in that seat, probably 8 different times, and building that operations support, having that experience and helping companies scale is critical. I think it's very important to be able to provide the data that the company needs and support, your peers on the management team, support the marketing folks, support the head of marketing, support the head of sales, support, even sort of the, head of tech in any capacity to help them with data, to make them smarter as they drive forward in their departments and as they, pull resources together to help grow the company at that stage. So I think it's very important to have systems in place, and my team in particular, typically is not just, obviously you have the accounting heads, you have the FP&A, which is really more sort of business operations, is the sexier term for FP&A these days, but it is very instrumental and has a big impact on helping teams be smarter with that data-driven decision-making, because, we're pulling together a ton of data and helping them analyze the data. And we're good at that. That's sort of our DNA, more so than, other folks.
Todd Sloan with us for sort of part 2 of our growth and scale for, emerging companies conversation. Todd, it's been really great to talk with you this morning. Thanks again for joining us. And I'm excited for part 3. I don't think we should wait 10 more months, but I think we should have part 3 where we take us to the final chapter of now I'm huge and what should I be doing to get huge? And if I find myself huge, how should I stay huge? Or what are some of the pitfalls I can avoid there? But for today, in that sort of mid-sized company, you've given us a lot of guidance on the essentials and the importance of data and surrounding myself with people who can help me get that data, and how growth and profitability are key parts of that sort of venture capital conversation as the purse strings are tightening a little bit. You need to be an organization that can shine through some of that. Todd, thanks for being with us today. Thanks for your generous expertise. Appreciate it.
Thanks for watching, and a special thanks to our subscribers. Consider becoming one today. Visit ProCFOPartners.com for more strategies and ideas for financial management and growth to help you put your business's financial picture in context.